Here's why institutional money is programmed to buy XLK at key volatility support levels. For example, today XLK was testing our volatility box clouds whenever price breached our volatility box levels right here with this red candle. When that happened, that told us that we officially had a volatility edge inside of XLK. Now, XLK is a little bit different and unique in that it's a sector ETF. Now, with it being a sector ETF, I think that also triggers the entire concept of institutional support beyond just what we as retailers can do. Pension funds, mutual funds, endowments, 401k plans, which I'm sure many of you have, they all need exposure to the technology sector. And a very common vehicle to do that is XLK. Now, whenever XLK has volatility days just like this, we have some automatic programs that kick in, automatic rebalancing programs, automatic dollar cost averaging programs, and you bring all of that together, I think you have the perfect storm of volatility levels that you want to pay attention to, where you also have institutional support and reasons for institutions to want to get involved. Now, if you take a look at XLK here today, you had 143.50, which is where I've drawn this horizontal line. It's not a special line, but if you come into the daily time frame chart, I think this line is a very important line in helping you see how capital flows very freely through this level here. Every single time we've hit this level, we've had some sort of interaction and prices broken straight through that level or acted as key support or resistance, with wicks standing out. So that tells me that 143.50 is a place that I expect to serve as some sort of a volatility edge. And now we use our intraday volatility box models to pinpoint exactly when and where that edge is. Today, the aggressive models were overlapping with this 143.50, and our conservative models were closer down here near 142.50. Now, if we take a look at what this chart looks like on a 5-minute time frame, which I think helps eliminate a lot of the noise, I think you get a much cleaner picture for those of you that are swing traders. First off, you start with the daily time frame. Inside of XLK, you now have with today a market stage of distribution, but leading up till today, notice how this market pulse line is green. That's telling you we have a little bit more of a bullish bias compared to a bearish bias. Now in that, we're getting an opportunity to enter at the bottom end of our zone. We have the entire concept of institutional support and all of these automatic programs that are kicking in. So natural buy-side programs that we expect to be tailwinds to our overall trade. And then you start to observe price action here. Take a look, every single time we touch 143.50, buyers happily step in. The one time we break below, you'll see just how quickly these buyers rip in and very happily are buying price below 143.50 and anywhere inside of our volatility box models. That's why I think the volatility box models are key. They're dynamic volatility-based zones where, oftentimes in the case of sector ETFs like this one, you have billions of institutional dollars ready to deploy and in fact automatically being deployed through some of these programs. I hope you found this video helpful in understanding more and more around how to use the volatility box models with our SPY sector ETFs. Take care, everyone. Good luck trading, and I'll see you in our next update.